Hello, fellow traders. 'Tis I, the Rumpled One. It is Tuesday, March the 20th, the year 2018. Let's talk trading. Hindsight. Oh, I had a one viewer called me Harry Hindsight. I have to laugh at that one. Um, you know, there's always going to be somebody that, wants to take a shot. It's easy to do that. I mean, I've been accused of it. You take a shot at what somebody else is putting out there. Um, but, overall, I put out videos and indicators and systems that you already know what I'm going to do in the future, or you have a pretty good idea that if I take that trade, where I'm taking it, why I'm taking it. So it's not really hindsight when I go back over things because you knew it before. I'm not changing anything. I'm not changing the game. I'm not changing the rules. I'm not changing the positions. I'm not changing the instruments. No. In fact, if you go back and you look at the post, you can look at posts for some of them over a decade, like the buy zone. And I think the rat zone might be approaching that too. Over 10 years, nothing has changed. So when I talk about a buy zone trade and here was a win and here was a loss if you took it, that's not hindsight. No, because the next opportunity is going to be the same as the previous opportunity. It's simple. In fact, that's what I used to post. I used to post opportunities on the rat zone. I'd show my little price GPS, and there were the opportunities. Whether or not you take the opportunities, that's up to you. I can't come there and click the mouse for you. And so if somebody wants to say hindsight, hindsight, go right ahead. You can come to my Pal Talk chat room, the 2% Club. It's free. I've been loading it back up. It was down for a while because I was down to one computer. And but now I've got this second laptop. I've got a whole bunch of desktops, but they're not Wi-Fi capable. So I mean, I still have the five desktops that I used to have back when I was in Tucson. But anyway, that's getting off topic. So the point I'm making is that it's not hindsight. Not when I'm telling you ahead of time. Here's the system. Here's how you do it. If you want to believe it's hindsight, well, you can choose believe whatever you want. You can think whatever you want. Doesn't affect me. Um, but I just do find that amusing. Now, another trader was asking about the three ball, the three level ZZ indicator. And for some reason, they call them semaphores. That's the name, but we just call them like one ball, two ball, three balls. I kind of wish you used the same colors as a pool table. Would have made things a little bit easier. Well, not easier, but maybe easier to talk about because everybody knows that three ball is red, right? Five balls orange and one ball's yellow. So, and he was saying that he saw across the board, that all the price chart periods had price was making three balls across the board. Yeah, that happens on a breakout. It can happen. Yeah, across the board you can get three balls. So that's not unusual. So let's just get ready to get going. And part of that hindsight is money risk management. Another trader said, "Hey, wanted me to watch this video, so I just got done watching it." And basically, he was talking about risk, money management, talking about how to get in a trade and trade like a casino. In fact, if I'm not mistaken, a few years ago, I even put out an indicator and a system about the casino. Um, and it's simple. Basically, you pick a direction, either long or short, kind of like a rat. And at the beginning of each hour, if you say you're, a green rat, you buy. If you say you're a red rat, you short. And you do it the same way. Now, there might be a slight edge if the day is green, that you do buys, and if the day is red, you do shorts. Then again, If it's, if it just punched in a new high, the previous hour, you might want to stand to the side. You might want to take the reversal trade. But, it's usually the best thing to do is just keep trading one direction. That way you put the odds in your favor, as proven by the Yale students. Don't try to filter out. Now, that being said, you see here, with the weekly, if you'd done the same thing, you would have punched out or punched in right here when it hit the high, and there were pips to be made. How many pips? Let's see. Let's put that about there, and let's come down to here. Is that right? Yeah, about 28, 29 pips. Not a bad trade. And let's see, we still have a few weekly gaps that haven't filled. I see. And you can see here across the open, we've got some nice movement on some of the pairs. See, dollar Canadians, basically, it's been crisscrossing across that weekly open. And you can see here on the daily what it's doing. So right now, we've got an inside bar. And you can see here on the daily, we've got some nice movement across that open. So those who like to trade the daily open crossover, in some cases, you've been paid handsomely. We've got some nice ranges going on here in the pound pair and some of the euro pairs. Euro dollar right there at 97. So, buy zone. I mean, hindsight, really? Come on. Cut me a break here. I mean, I tell these things every day. So, as I said, in this area, the Australian New Zealand Open, the Asian session, don't even really think about it. But here in the London session, you can see all these short opportunities. And right here, you saw that one opportunity to go long. Okay, here, you'd have had your fingers burned, taking a stop, unless your stop is here. Now you're just writing it out. So there is no hindsight because these lines don't change. Once the daily open's established, these lines do not move for the entire day. And it's just that simple. So there is no hindsight because when price gets here what to do. And with the rat zone was put in here. As you can see, there was a nice red rat trade followed by a nice green rat trade. Once again, for those just tuning in, the rat zone is the zone from the current daily high minus 20 pips, current daily low plus 20 pips. And hopefully, when you add it up, this should be about 60. Right now, it's only 50 difference between the high and the low, that daily range. And usually at the end of the day, price will be outside both of the zones. That's based on statistics. That's why the trade works. And the pivot, let's see, that's kind of crunched up there. Let me expand that out. As you can see, there really wasn't much distance between the open and the pivot, but once again, fading the pivot proved to be profitable. Fading means you trade from the open towards the pivot. That's fading the pivot. and on price action. Now, once again, people are talking about hindsight. And maybe in the cases of the one ball, two ball, three balls, the three levels easy semaphores, you know what? I'll give you that because you don't know. Because right here it could have made a lower one ball or maybe a two or three. I'll give you the hindsight on that one. But as far as the horizontal lines, no, because these horizontal lines don't move. 1.3080 is always going to be right there. And so you can see here, red at the line, you go short. Green at the line, you go long. Red at the line, you go short. Okay, green at the line, you go long. Okay, red at the line, you go short. You got your fingers burned. That's trading. Red at the line, you made money. Green at the line, you made money. Here, green at the line, money. Red at the line, money. So, I mean, is that hindsight? No, because right here you can do this. You can get in a trade, this next trade. Let's see, we got 20 minutes. If price gets here, you go long. Price has already been here, so you don't want to go to the well twice. It's not usually not a good idea to go to the well twice in an hour. Go once per hour. And then the 5 lines, once again, trading at the line with the H1 candle color. As you can see here, when price hit here, it was green, came up. You could have made what? 5, 6 pips. Oh yeah, and I think somebody else made a comment. I was talking about, testing a system slash method slash indicator that you have to give it at least 100 tries. So I say, you have $100 account and you trade, your risk would be $1 per trade. That way, if you were so unlucky and you lost 100 times in a row, then your $100 would be gone. But are you really that unlucky? That's the question. So I would hope not. So the point is, I'm not advocating, that you try to make a career trading $100 account. No, that was for testing something new. So, maybe you've got a $10,000 account, you want to try something new. Well, you set aside $100, so you're treating it like a $100 account. You put on that, 0.01 mini lot or 0.01, that's a micro lot. So you're basically trading a dime a pip. So you have a 10 pip stop loss because that's the smallest unit you can trade is that 0.01. So that's what you risk. I mean, it's just so funny how people, sometimes people hear what they want to hear and they see what they want to see and they look for things to prove that. But you see, that's not what science does. Usually in science, if you have a theory, you try to disprove it because when you write that paper, you want to make sure it's solid because everybody else is going to try and knock you down. So as traders, we really need to be more like scientists and we need to say, okay, here I want to enter a trade. Let's see, is there any reason why I shouldn't enter that trade? Now, you can go overboard and never trade because I'm sure there's always could be some reason. You could find some statistical reason not to trade, maybe. You could find some, I don't know, gut feeling reason not to trade. There's lots of reasons not to trade. But the point is that, some people just see and hear what they want and they only try to prove their point or disprove yours. They don't listen for understanding. Wick zone, once again, price doesn't like staying in the wick zone. As you can see, it popped in and out a bunch of times. Holo zone, once again, here we go. Opportunities to pick up some massive pips. Nothing really going on the tick chart. So, that being said, fellow traders, remember, it's not what you trade, it's how you trade it. TheRumpledOne signing off to drain the banks.